Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 10th, 2025, and we're diving into AstroNova's fiscal 2026 third quarter earnings report. AstroNova, a leader in specialized print technology solutions, has just released their latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss AstroNova's performance, especially given the interesting developments in their product identification and aerospace segments this quarter.
Revenue and profitability overview. Let's start with the top line. AstroNova reported a revenue of $39.2 million for the third quarter of fiscal 2026, which is an 8.5% increase sequentially. However, compared to the same period last year, revenue saw a slight decline. John, can you elaborate on this?
Absolutely. The sequential growth was driven by both the aerospace and product identification segments. Despite the year-over-year decline of 3.1%, the company managed to improve its gross profit by 3.5% to $14.2 million, thanks to productivity improvements and a better product mix. The adjusted EBITDA also saw a significant increase, reaching $4.2 million, which is 10.7% of sales.
And what about the earnings per share?
The adjusted earnings per share came in at 20 cents, reflecting a strong improvement in profitability. This was supported by a net income of $0.4 million, or 5 cents per diluted share, highlighting the company's effective cost management and operational efficiencies.
Segment performance. John, let's delve into the segment performance. How did the product identification and aerospace segments fare this quarter?
The product identification segment reported revenue of $26.8 million, up 2% year-over-year and 8.5% sequentially. This growth was driven by increased shipments across all product categories, particularly in mail and sheet flat pack printers. The segment's operating income was $1.9 million, maintaining a stable margin despite some inventory provisions.
And the aerospace segment?
The aerospace segment saw a revenue decline of 12.7% to $12.3 million, primarily due to a tough comparison with the previous year's atypical orders. However, the segment's operating profit increased by 39.4% to $4.5 million, thanks to improved product mix and operational efficiencies.
Balance sheet and cash flow. Moving on to the balance sheet and cash flow, AstroNova generated $3.4 million in operating cash this quarter. How does this impact their financial position?
The company has strengthened its balance sheet significantly. They reduced their debt by $3.2 million this quarter, bringing the total debt reduction to $6.4 million year-to-date. Additionally, they ended the quarter with $3.6 million in cash. The refinancing of their lending agreement on favorable terms further enhances their financial flexibility.
That's impressive. How does this position them for future growth?
With a stronger balance sheet and improved cash flow, AstroNova is well-positioned to invest in growth opportunities, particularly in their high-margin aerospace segment, and expanding their product ID offerings.
Future outlook and strategic initiatives. Looking ahead, what are AstroNova's expectations for the rest of fiscal 2026?
AstroNova has maintained its revenue guidance for the year between $149 million and $154 million, with an adjusted EBIT margin expected to be in the range of 7.5% to 8.5%. The company is focused on driving growth in the product ID segment and capitalizing on their strong market position in aerospace.
What strategic initiatives are they pursuing to achieve these goals?
They're working on stabilizing their business and reigniting sales in the product ID segment. Additionally, they're leveraging their leading market position in aerospace to displace legacy products with their ToughWriter brand flight deck printers, which is expected to drive future growth.